Welcome to Accounting for SS1 at LightTech Academy. Today we study adjustments, accruals and prepayments. Why are adjustments needed? Final accounts are prepared on the ACCIULS, matching basis. Income and expenses are matched to the period in which they are earned or incurred, not when cash is received or paid. At year end, some expenses may not yet have been paid, ACCIULS, or some may have been paid in advance, prepayments. These must be adjusted before the final accounts are complete. Adjustment 1. Accrued expenses, outstanding expenses. Accrued expenses are expenses that have been incurred, the service has been used, but not yet paid at the year-end date. Effect on accounts, the expense must be increased in the P&L account. The outstanding amount appears as a current liability in the balance sheet, it is money the business owes. Example, a business has electricity expense in the ledger of 48,000 Nigerian nairas. However, at December 31st, there is an accrual unpaid bill of 4,000 Nigerian nairas for December electricity. Adjusted electricity expense in P&L equals 48,000 Nigerian nairas plus 4,000 Nigerian nairas equals 52,000 Nigerian nairas. Balance sheet, accrued electricity 4,000 Nigerian nairas appears under current liabilities. Double entry for accrual, Dr. Electricity account 4,000 Nigerian nairas / SIA accruals account 4,000 Nigerian nairas. Adjustment 2, prepaid expenses, payments in advance. Prepaid expenses are expenses that have been paid but relate to a future period beyond the current year end. Effect, the expense must be decreased in the P&L account. The prepaid amount appears as a current asset in the balance sheet, it is money the business is owed back, in the form of future benefit. Example, insurance in the ledger is 24,000 Nigerian nairas, paid for January to December. However, 6,000 Nigerian nairas of this relates to January-March of next year, paid quarterly in advance. Prepayment equals 6,000 Nigerian nairas. Adjusted insurance expense in P&L equals 24,000 to 6,000 Nigerian nairas equals 18,000 Nigerian nairas. Balance sheet, prepaid insurance 6,000 Nigerian nairas appears under current assets. Double entry for prepayment, Dr. Prepayment account 6,000 Nigerian nairas / SIA insurance account 6,000 Nigerian nairas. Adjustment 3, accrued income. Accrued income is income that has been earned but not yet received at year-end. Effect, income is increased in the P&L, accrued income appears as a current asset in the balance sheet. Example, rent receivable in ledger is 30,000 Nigerian nairas. Rent for December, 5,000 Nigerian nairas, has not yet been received. Adjusted rent received in P&L equals 30,000 Nigerian nairas plus 5,000 Nigerian nairas equals 35,000 Nigerian nairas. Balance sheet, accrued rent receivable 5,000 Nigerian nairas under current assets. Adjustment 4, deferred income, income received in advance. Deferred income is income that has been received but relates to a future period. Effect, income is decreased in the P&L, deferred income appears as a current liability in the balance sheet. Example, commission received in ledger is 20,000 Nigerian nairas but 3,000 Nigerian nairas is for January of next year. Adjusted commission in P&L equals 20,000 to 3,000 Nigerian nairas equals 17,000 Nigerian nairas. Balance sheet, deferred commission 3,000 Nigerian nairas under current liabilities. Summary table. Accrued expense P&L equals ADD to expense balance sheet equals current liability. Prepaid expense P&L equals deduct from expense balance sheet equals current asset. Accrued income P&L equals ADD to income balance sheet equals current asset. Deferred income P&L equals deduct from income balance sheet equals current liability. Adjustment 5, provision for bad debts. A provision for bad debts, or also called provision for doubtful debts, is an estimate of the amount of debts that may not be collected. Creating or increasing the provision, Dr. Profit and Loss account, expense, / SIA provision for bad debts account. In the balance sheet, debtors are shown as debtors Nigerian Naira X 000. less provision for bad debts, Nigerian NERDC 000. Net debtors Nigerian NERDC 000. Decreasing the provision, the reduction is credited to P&L income. Remember, adjustments needed because final accounts prepared on ACCIULS/matching basis equals income plus expenses matched to period and or incurred not when cash moves. Accrued expenses/outstanding, incurred but not yet paid at year-end P&L equals increase expense, balance sheet equals current liability. Example, electricity ledger Nigerian Naira 48, 000 plus accrual Nigerian Naira 4, 000 equals adjusted P&L expense Nigerian Naira 52, 000 plus balance sheet current liability 4,000 Nigerian Nairas, Dr. Electricity account plus SIA accruals account. Prepaid expenses/payments in advance, paid but relates to future period P&L equals decrease expense, balance sheet equals current asset. Example, insurance ledger Nigerian Naira 24,000, prepayment Nigerian Naira 6,000 equals adjusted P&L expense Nigerian Naira 18,000 plus balance sheet current asset 6,000 Nigerian Nairas, Dr. Prepayment account plus SIA insurance account. Accrued income, earned but not yet received P&L equals increase income, balance sheet equals current asset. Deferred income/received in advance, received but future period P&L equals decrease income, balance sheet equals current liability. Summary, accrued expense equals ADD to P&L plus current liability in B/S, prepaid expense equals deduct from P&L plus current asset in B/S, accrued income equals ADD to P&L plus current asset in B/S, deferred income equals deduct from P&L plus current liability in B/S, provision for bad debts, estimate of debts that may not be collected, creating or increasing equals Dr. P&L account/expense plus SIA provision for bad debts account, balance sheet, debtors less provision for bad debts equals net debtors, decreasing provision equals credited to P&L/income. Thank you and keep excelling at LightTech Academy, powered by LightTech Solutions Limited.